November 8th, voters in 4 states, Massachusetts, California, Maine, and Nevada, approved recreational marijuana use, and it's something that's now legal in 8 states and Washington, D.C. And in fact, some form of legal cannabis use is on the books in 26 different states, and there are undoubtedly a number of food and beverage entrepreneurs eyeing the space as a potential growth opportunity, perhaps. So the cannabis industry is projected to be a $50 billion business by 2026. And I know it's not a perfect comparison, but if you look at what the craft beer segment did last year, they did about $22 billion in sales. So certainly something to keep our eye on. So why are we talking about weed at a beer conference? It's probably because just yesterday or 2 days ago we published this headline: beer volumes declining in markets where recreational cannabis is legal. That report came from our next speaker, Vivien Azer, and she is Cowen and Company's managing director and senior research analyst specializing in the beverage, tobacco, and cannabis sectors. And over the last few months, Vivien and her team have been closely monitoring the marijuana industry and researching what impact its growth might have on alcohol producers. So she and her colleagues have compiled a 110-page report on the cannabis industry, and today she's going to share some of the findings from that report, discuss the interaction between alcohol and marijuana, and explain the possible near-term risk to that recreational marijuana legalization presents for alcoholic beverage companies. So please welcome to the stage Vivien Azer. Welcome.
Thank you.
I'll let you take it away.
Great. So good morning. Thank you for having me. So I'm Vivien Azer. I am the beverages, tobacco, and cannabis analyst at Cowen. This is a relatively new sector for us. We just initiated with the 110-page report that Chris mentioned 2 months ago, but it's an area that I've kind of been keeping my eye on for a while, given that I've been covering alcoholic beverages for about 6 years, both at Citigroup and now at Cowen. And we do view this as a potential substitute social lubricant vis-a-vis alcohol. So we wanted to do a lot more work on that, and those are some of the insights that I hope to share with you today. So we're going to talk about 4 different things. So just an overview of the election, what's happening with cannabis consumption in the United States. We've got really good, robust government data on that. It's the NSDUH survey of 600,000 consumers that the government surveys annually. Then we'll talk about the interaction with alcohol, and then potential risks and opportunities. So just to kick things off, as Chris mentioned, there are 8 states that now approve legal recreational cannabis use, plus Washington, D.C. There were 4 big ones that passed this year, all via ballot initiatives, as well as 4 medical. So we've now got 28 states, actually, plus D.C. on the medical side, and 8, including the entire western seaboard for recreational use. It will take time for the additional 4 markets to open up. Generally, it takes about 12 to 24 months to get the rules and regulations in place. So what's notable about the fact that all of these states implemented via ballot initiative is that's really what the genesis was for medical marijuana as well. You can see 8 out of the first 10 states that approved medical marijuana did so via ballot initiative, and that's about 50% of the total 28. But what we really wanted to show you guys in this chart is, while the consumer is the one driving these initiatives out of the gate, eventually legislatures catch up and start recognizing that, if they don't do it, the consumer is going to do it for them via ballot initiative. So we have seen a lot more legislative activity on the medical marijuana side. Why are the legislatures acting? Because consumer support is readily apparent in terms of legalization of cannabis. This is support for recreational cannabis, which per Gallup is now at 58%. It's the second record high. And what's really telling, I think, about the data on the right is just number one, how big support is amongst millennials with 71% support, but also the increases that you've just seen between the 2000 survey period and the 2015 survey period, where with almost every cohort, the amount of support nearly doubled. And that's including 65-year-olds, where now 35% do support legal cannabis. Just to take a closer look at the impact of the election, so we did see 4 out of 5 states pass. Not surprisingly, there was a lot of overlap in terms of voting by party. So Arizona was the only one that did not pass, and that state was a red state. For me, just getting 4 out of 5 was certainly better than I would have expected, and frankly, for Arizona to come in at 48.1% support, I think is pretty telling in and of itself. So now that we've got the 8 states plus Washington, D.C., following this election, 21% of the population now lives in a legal cannabis market, and that represents about 24% of total GDP in the United States. These are not small numbers. On the medical side, we now have 60% of the US population living in a medical cannabis state. And what I think is really interesting about this is that every state that passed medical marijuana this year was a state that voted for Trump. And this is something I'm getting a lot of questions about, given the unexpected outcome of the election, plus the announcement of Jeff Sessions as the AG, what does that mean for cannabis? At least from a medical standpoint, this should be pretty supportive of no massive disruption in terms of the medical market. And again, these are all state level initiatives. Florida, clearly a standout, right? That state went red, 71% support for medical marijuana. So the momentum is clearly there. So what does that mean in terms of the opportunity for the cannabis industry? As Chris mentioned, we do think that this industry could grow to be $50 billion by 2026. That does assume federal deregulation. We haven't put an estimate on when we think that's going to happen. When we made our estimate, we tried to account for 2.5 presidential election cycles and 5 broader election cycles, because what we assume is going to happen is a continuation of what we saw during the election in 2016. Where you're just going to see more and more states put ballot initiatives on, and then that's going to drive broader momentum, both on the ballot side, but is also on the legislative side. Because one of the things that I thought was so interesting last year was that the state legislatures in both Vermont and New Hampshire did in fact contemplate legalizing recreational cannabis. Why? Well, amongst 18 to 25-year-olds in the United States, there are only 3 states in the country where monthly cannabis consumption is over 30%. It's Colorado, Vermont, and New Hampshire. So the product is obviously widely available in the illicit market, and it's widely used in the illicit market. So they couldn't get it over the finish line, but the fact that that's already being contemplated is part of our bigger picture, that the consumer and the voter will continue to drive momentum, and the legislatures will catch up. Getting to a $50 billion industry from what we think legally is a $6 billion industry today certainly seems like a stretch. I cover a broad basket of consumer staples, and it is almost impossible to find a category where I can see kind of good line of sight to 20% compound annual growth rate over the next 10 years. But the reason I feel so comfortable in this estimate is that a big piece of the market already exists. It's just not legal. So we think that the legal market is about $6 billion. Colorado right now is already at an annualized run rate of $1.3 billion. Washington State is at about $1 billion run rate. We know California is big. It's not well tracked, but we think that's got to be at least another $1.5 billion. But when you look at the total number of admitted cannabis consumers based on the U.S. government survey data, the government data would imply that there's close to 33 million consumers, while we think that it's probably close to 40. And the reason that we get from 33 to 40 is that we do think that there's a response bias, right? It's important to keep in mind that cannabis is still a Schedule I controlled substance, so it's totally illegal at the federal level. As far as the federal government is concerned, it is on par with heroin and worse than cocaine. So I find that pretty remarkable. So in terms of our modeling work, we're assuming growth across all cohorts, and you can see what our assumptions are there. But most of the growth we think is going to come from consumers that are ages 26 and above. And that's pretty consistent with what we've already been seeing. So what you can see is that past year cannabis incidence has been just growing up into the right, basically since 2008, which I think is interesting when you think about what happened to the beer category during the recession and coming out of the recession. And you can see that a bulk of the growth was coming from consumers 26 and above, where the percent growth was over 30% just between 2011 and 2015. Amongst 18 to 25-year-olds, that's been growing as well. It's not necessarily surprising to see that incidence is so much higher with that age group. But I think, at least from a regulatory standpoint, the most encouraging number on this page is what's happened to 12 to 17-year-olds, where incidence has fallen by 11%. So what I wanted to do is just offer a snapshot on what's happening in some of the legal markets, because that really helps inform my view around response bias in the government data, but also like the potential future opportunity for the category. And what I think is just so telling, and you can see this most apparently in the chart on the right, which is for 26 years old and above, for both Colorado and Washington, you basically saw incidents, 12%, kind of, trending sideways for Colorado. It was going up in Washington, but, at a small clip. And then what you can see, and the government data kind of blends 2 years when you look at the state level data. But take a look at 11 and 12, and then take a look at what happened in the next 2 survey cycles. Because the response bias and or cannabis category interaction definitely started going up, not when the first store opened up in Colorado or in Washington, but when the law passed. And that has been a key driver of incidence nationally. So 26 and above, very big increases, and that's fueling broader increases amongst consumers age 18 and above that you can see on the left-hand side. Colorado really is a standout in terms of the percent incidence, as I mentioned earlier. It's one of the highest in the country, followed by the entire New England area. It's not necessarily a surprise as well that Massachusetts passed, for instance. 18 to 25-year-old monthly incidence in Massachusetts is 29%. It's 29% in Maine too, so very high in New England. So what do we know about the cannabis consumer? Well, they're increasingly high per cap consumers, and that's what I think you guys really need to think about, because as I think about an alcohol occasion or a legal cannabis occasion, the more legal cannabis occasions that are entering into a consumer's weekly behavior or monthly behavioral pattern, that is what puts at risk the potential alcohol occasion. And so what you can see is that there's been a pretty notable increase in the percent of past year users that report daily use. Again, I totally acknowledge this response bias. I mean, it's pretty remarkable to me that this many consumers are willing to admit any of this behavior to the U.S. government, but it's pretty staggering on the right-hand side. So you've got about a third in the discrete past month data that are now using cannabis on almost a daily basis, right? 26 to 30 times a month. And what's interesting is you can see that it just feels like it's this big waterfall effect, right? That people are entering the category, they're entering as, light users, 1 to 6 times a month, right? So, not heavily engaged, but as you kind of look at the way that the time series data evolves, it's really those low incidence occasions that are the source, and then as per capita consumption goes up, the middle charts basically end up trending sideways, because what you see is that more and more consumers are shifting to monthly use. Almost daily use. So what does this mean for alcohol? So what I really do focus a lot on, just because the N is so robust, is incidence, which I know is not a perfect measure when you're trying to translate into volume sales or dollar sales. But I think it's pretty telling that we've seen, really starting in 2012, the growth in alcohol incidence. So that's the percent of adults that report to the government that they have used alcohol in the past year, really plateaued and then rolled over in 2015. While at the exact same time, we've just been seeing very steady growth in terms of admitted cannabis use on a past year basis. And what the key driver of that is actually changes in behavior amongst men. So what you can see on the right-hand side, that downward-facing bar, that's the cumulative change in past year male alcohol incidence. And you can see, in particular, between 2012 and 2015, that that's been getting worse. So you can see both on a 5-year basis and on a 10-year basis on the chart on the right that alcohol incidence is in the decline amongst men, while cannabis incidence is clearly on the rise over both of those time horizons. The good news is that alcohol incidence amongst women continues to grow, and there continues to be a pretty nice gap there, where you've got 61% of males that are surveyed by the government reporting monthly alcohol incidence, but only 51% of females. And it's also helpful that while cannabis incidence is up with women, the rate of cannabis incidence is not quite half that of men. When we look at interaction. This is really, the key question, right? So we've got more daily pot smokers, right, or THC consumers. What does that mean for alcohol? And we are seeing evidence from the U.S. government data, again, that there is both substitution and complementary use. So the chart on the left, the government is asking the question, in the past month, when you used alcohol, did you also use cannabis? And then conversely, when you used cannabis, did you also drink alcohol? So the encouraging thing is that there is evidence of complementary use, and you can see that on the left-hand side, where in 2009 it was 27%, and that grew slightly in 2014, which is the most recent data that we have, to 28%. But the thing that really caught my eye, and the thing that I think you guys really need to focus on, is what's happening with cannabis users and their alcohol consumption, because you can see that fell from 93% co-incidence to 86% on a 5-year time horizon. And I think one of the explanations for this is there are real changes in consumer perception around risk associated with both of these two product categories. So again, looking at 18 to 25-year-olds, because they're going to be, obviously the higher per cap cannabis consumers, and I think they probably tend towards higher per cap when it comes to beer too, is that risk perceptions around alcohol are, number one, higher than they are for cannabis in a fairly meaningful order of magnitude. And then in terms of hyper-cap consumption occasions for alcohol, it's been on the rise, where consumers who were surveyed, who were asked, if you have 5 or more drinks 1 or 2 times a week, do you think that is risky behavior? That now stands at 39%. But look at the 2 sets of bars on the very far right in terms of risk perception around cannabis. Only 16% of 18 to 25-year-olds think there's any risk at all associated with smoking marijuana roughly once a month. And even the risk perception around smoking 1 or 2 times a week has been cut in half, basically, over the last decade, which I think is pretty telling in terms of willingness to engage in, what had long been a stigmatized category. So from an income perspective, especially when we're talking at a craft beer conference, we certainly want to give you guys some perspective on incomes, because not every consumer in the United States can afford your products given their premium price points. It is interesting to note that there are big differences, number one, in alcohol consumption by income cohort. And so what we did on the left-hand side, and obviously there's going to be some double counting here, but we took kind of total social lubricant behavior. And so what you can see for consumers that live in a household with $20,000 or less, their propensity to consume alcohol on a past month basis is far lower than that of someone who lives in a household where the income is $75,000 or more. So order of magnitude, it's about 40% for households with an income of $20,000 or less. It's over 60% when you look at households with incomes of $75,000 or more. The offset is that while those lower income households have a lesser propensity to drink alcohol, they have a greater propensity to use cannabis, or to at least admit to the government that they're using cannabis. And so that is where we're seeing really good growth in terms of cannabis incidence, but interestingly, alcohol incidence as well. The other, I think, key takeaway from this chart to note is what's happening with consumers who have incomes of $75,000 and above. Given how high their alcohol incidence is today, I don't know that it's necessarily surprising that you're not seeing any more growth. When you look at, well over 2/3 of this subsector, already acknowledging or engaging in alcohol on a past month basis, how many more of those cohort of people in that cohort are you going to be able to recruit into the category, right? And so it could very well point to a bit of a ceiling in terms of alcohol penetration with higher income households. They are, of course, taking up cannabis, but they're taking up cannabis at a lesser rate. This is not all that surprising to me either. Just if you think about, the vast majority of cannabis sales right now continue to be in the black market. Knowing somebody where you could procure that illegal substance, I think the likelihood of that goes down with income as well. So, the note that Chris referenced that we published 2 days ago has certainly gotten a lot of attention. I think the first thing I would acknowledge is that the data is obviously imperfect. We're dealing with a very small data set, given that we only have 3 legal recreational markets. Denver and Washington both opened in 2014, but Oregon really is just starting to open up right now. It's been about a year, but they really were slow to formalize the transition from medical outlets to recreational outlets. But the data that we got was Denver Liquor, and then Washington State and Oregon State. And when we aggregated that, what we found was in volume terms, the beer volumes in those 3 markets for the data that we did have is underperforming the national trends by about 260 basis points. That's year to date through early November. What's notable is that in 2013 and 2014, these markets were big outperformers, right? You know, these are big craft beer markets, not necessarily surprising. In 2014 in particular, I think is a standout given the notable growth that you have. My hypothesis there is that was probably the benefit of marijuana tourism, specifically in Denver. I've heard estimates that anywhere from 30% to 50% of cannabis sales that occurred in Colorado, at least in year 1, were from out-of-state residents. So, if you think about somebody who's going to go to Denver for a weekend, they want to go see a dispensary. Hey, what is this new category all about? If you're staying for the weekend, you're still going out, right? Or you're, getting an Airbnb and bringing a 6-pack home, to hang out with your friends while you're in the market. When we, so you can see some of the more discrete data there. Denver is really the problem, but I would also highlight that in Oregon, you've seen basically decelerating growth turn into a decline as well, and Washington is kind of holding its own. Largely, we think this is coming from lower-priced beers, which should not be a surprise given the income data that I showed you, right? Marijuana incidence is much higher amongst lower-income consumers, where I think you're going to see the greatest overlap with economy and premium beers, and that does seem to be the big drag. We cut the craft data a little bit differently, so I recognize it probably doesn't line up with what we just saw in the last presentation, but it is apples to apples, in the chart that I'm showing you. And you can see as well there was a deceleration there, but that's pretty consistent with the national trends. So why are these products, I think, so intriguing, and why are they engaging new consumers? Because the category has gotten really innovative, and you guys know this, right? This craft beer renaissance was all about innovation in styles, and innovation in materials, and innovation in channels, and how you talk to your consumer, and the value proposition that you're bringing to the table. Well, the cannabis industry has figured this out. And in particular, it's what they're focused on is not just engaging a consumer who's, making their purchases in the illicit market and formalizing, those retail dollars into the legal market, but it's also about really engaging what I would define as lapsed consumers. So if you look at monthly cannabis use, it's about 10% in the United States, but over 40% of adults will admit to the U.S. government that they have tried cannabis, right? Now, they've opted not to stay into the category for a variety of reasons, but I would argue, being a tobacco analyst, that combustion is one of them. And so, for a lot of these consumers, when they tried cannabis, when they were in their 20s, call that a decade or 2 ago, combustion was really your only option, right? Now you could, put it in a bong, a bowl, roll a joint, what have you, but it all involves setting something on fire and inhaling that smoke. And, you look at rates of tobacco consumption, and it's consistently on the decline, both amongst adults and in particular amongst younger consumers. They just, I think, have figured out that setting something on fire and breathing it into your lungs is maybe not the best idea across any category. So what you've seen is the emergence of a variety of form factors in terms of THC delivery. Personal vaporization, which is technology that actually came out of the tobacco industry, is certainly one. There are high-end personal vaporizers like the packs that retails for about $300, and over a couple of years they've sold 1 million of those. It's much more discreet. It doesn't have as much odor, and obviously you avoid combustion. Higher strength delivery mechanisms have certainly emerged, like dabbing. Maybe some of you guys are familiar with that, but really it's all about taking that concentrate, right? You take this whole organic flower, you extract the THC, and then you deliver it in a vapor format. You know, I was just in Vegas 2 weeks ago at this big marijuana conference that had record attendance. 10,000 people were there, and everybody was talking about vape pens. And that's not necessarily a surprise when you look at what teenagers are doing in terms of nicotine consumption either, where vapor products have gone from 1.5% of the market in 2011 to 16% of the market in 2015 amongst teenagers. So this is a form factor that is very familiar and it's incredibly discreet. Now, for people who are like really not engaged in that kind of consumption behavior, there are plenty of other ancillary product categories that offer THC delivery in a non-combustible, lower risk format. So obviously, you know, edibles are very popular, but there are a lot of topical solutions too. We don't have a picture of it, but you know, there's one company in Colorado called Mary's Medicinals. They sell transdermal patches. In 3 years, they've sold 1 million of them. I would contend that somebody who's ripping bong hits on a daily basis is not throwing a patch on, right? That is a soccer mom type of delivery format. So here's some data to support what I just kind of walked you guys through. So the whole flower market, you know, just even 3 years ago was 100% of the cannabis market. Now whole flower, at least in Washington State, is less than 60% of the category. Vapor has been a big piece of it. People are buying pre-rolls, edibles, concentrates, all of the above. Now what's interesting is that with this innovation, you are seeing a little bit of price deflation. And so this is, you know, potentially a longer term opportunity. If you're gonna make the argument that, you know, your core consumer has a finite number of discretionary dollars, price deflation, as these markets formalize and as more products come onto the market and drive some price competition, that could be a helpful offset in terms of freeing up some incremental dollars that can flow back into the beer category or alleviating some of the pressure that you would see in terms of dividing up that discretionary purchase. So, what do you guys do? I definitely have had a couple of people reach out to me already on CBD infused beers. We know that there is some THC infused alcohol products on the market already. Melissa Etheridge, for instance, does have a THC infused wine. I don't really know how big that overall market could be. That seems like a very punchy social lubricant when you mix these two things together. But you know, cannabis incidence is on the rise, but it's not growing as fast and it's not as popular with every consumer. So if I were you, what I would be looking at is which consumer cohorts have the least propensity for cannabis, because that's going to be your real opportunity. If you're worried about losing consumers, you should be really worried about high incidence consumers, and you should be doubling down on lower incidence consumers. And Hispanics are a real standout here, and I think that's one of the things that has really helped Constellation Brands, because you can see there are two things going on with Hispanics. Number one, their cannabis incidence is lower than other ethnic cohorts. But number two, for you guys, so is their alcohol incidence. We did a big thought piece on this after the election, because there's been just so much hand-wringing around Jeff Sessions and Trump and deporting undocumented immigrants and slapping a beer tariff on Mexican imports. But you can see, like, you know, cannabis is on the rise, but you know, they trail basically. I mean, they trail blacks by a lot. They're basically in line with Caucasians, but the alcohol incidence has been growing. And when we did a separate analysis around millennial behavior, we did find that there are massive gaps when you look at male Hispanic millennials versus Caucasian Hispanic millennials. The incidence gap is close to 1,000 basis points. Now it's been closing, but that is really the opportunity as well. And so you can see that a little bit more clearly here. So on the left-hand side, you can see the past month male alcohol use amongst 21 to 29-year-olds is on the rise, but there's a huge gap relative to Caucasians. And yes, for Hispanics, cannabis incidence is on the rise too, but it's on the rise with everybody. The other opportunity is women. I mentioned earlier, right, 6% cannabis incidence for women versus 11% for men, and then there's that full 10 percentage point gap in alcohol incidence versus men and women in the United States. And so that's a real opportunity. Now, figuring out how to crack that code, where the NSDUH and Gallup data would suggest that that these consumers materially over-index to wine, is what you have to figure out. But certainly, some of the styles that were talked about in the earlier presentation, should definitely be on your radar, right? Because this consumer has a lot more alcohol occasions that you could capture given their lower level of incidence. So that is it. I wanted to leave plenty of time for Q&A. Chris asked me to do that, and I promised I would. So thank you very much.
It's certainly a lot to take in. I might need a dab or something to get through this. I was debating whether or not I would ask for a show of hands to see if we have some incidence use here in the audience. But I guess we'll give it a couple minutes. We'll see how this question and answer goes. Some really interesting stuff. The decline in alcohol use amongst men, you touched on it just a minute ago, and the increase in alcohol use amongst women. That seems to be an increasingly more important sort of factoid for some of the brewers here to focus on. Really, it seems like the opportunity is focusing on the female demographic. What are some ways that you think, brewers can really go after that, and kind of putting it against the backdrop of marijuana use in general, long term, what sort of opportunity do you see for brewers targeting both women and Hispanics?
Yeah. I think you guys are going to have to figure out a way to make up for the disenfranchisement that I think some of the bigger competitors created in terms of engaging a female consumer, right? The type of advertising that we were seeing from the big beer players in the 1980s and 1990s, I don't think did anything in terms of helping the beer category engage that female consumer. And so, because you guys are local and because you really can interact on a more personalized basis, I think that necessarily gives you an opportunity to engage that female consumer. And then you're really not at all constrained by style, right? And so bringing styles to the table that tend to be a little bit easier on the palate, tend to be a little bit more fruit forward. I think that probably works well. You're certainly seeing a lot of innovation on that front on the wine side too, and on the distilled spirits side, right? Everything that has a flavor component has really been gaining a lot of share with females. So I think innovation in terms of expressions is really good, and really embracing that female consumer and changing the way that you talk to her. It can't be the bikini-clad girls from the 80s and 90s. That doesn't work.
Right. So another interesting point that you had up there was the usage amongst lower income individuals, cannabis use amongst that group. And obviously we've seen the decline in some of the domestic products, and the report that you had the other day, pretty clearly indicated that that's the segment of beer that's being most impacted right now. But I kind of look at that and see perhaps an opportunity for craft to kind of fill a gap there. So if we're going to have dual use, cannabis and alcohol, it sort of stands to reason that you only have a finite amount of dollars to spend on both. So do you think that there's an opportunity for brewers to capitalize on that sort of crossover segment, where maybe you're offering a fuller flavored beer at a lower price point to capture some of the incidents where people are going to be using both substances together?
Absolutely. And I think, the coincidence data that we saw, even though the growth was modest, going from 27% to 28% in the last 5 years, that is your opportunity. The thing I haven't figured out, though, is, how the consumer is going to kind of manage that total buzz, if you will, right? Because these are both social lubricants. So is it, focusing on more sessionable beers, or is it offering more buzz for your buck, right? Because, when I look at beer category pricing in craft, some of my investors come to me and say, oh my gosh, craft beer is getting so expensive. How can a consumer afford that? And I said, yeah, but it's also not 4.2% ABV either. So if you actually look at the ounces on an ABV adjusted basis, then you're actually getting a pretty good deal. That, I think, is the challenge. And I don't have enough data yet to point to that. But no, sure, you are seeing growth in coincidence.
Yep. So a couple audience questions before we head into break here. What are the elements of that $50 billion market that you're projecting?
Yep.
You know, how much is manufacturing, services, on and off premise growing? How do you see it all shaking out?
Yeah, so that is just a retail sales number. So what we did was we looked at the growth that we were seeing in incidents already. So our starting point is the 33 million consumers. We have some good government data on average spend for cannabis, both on a national basis, and then we're able to look at the Washington state data as well. It seems like it's about $1,000 per person per year. So that's strictly just on the THC-based products. That does not include any of the ancillary components in the market.
Have you guys done any sort of research to understand how big, you know, the other number might get, or how large it might get?
We haven't.
Okay, interesting. One of the other questions that we fielded here, how much will growth in the cannabis market be constrained, excuse me, by the inability to use the federal banking system? And when do you think those restrictions will be lifted?
So I don't think it'll be constrained at all, because what you're seeing with every passing year is that more and more private money is coming in to fund the expansion of the cannabis market. There's one big private equity fund, private tier. They closed around, they've raised over $130 million. So access to capital, even though like my investors can't invest in anything, you know, that directly touches the flower, you're just seeing a lot of family offices and a lot of high net worth individuals investing their money in their own businesses. So increasingly, you're seeing former Wall Streeters enter the market as cannabis business people and formalizing that market.
Right, but I think also too part of the question was just you know, the ability to bank some of these dollars, and you know, we saw some issues early on with that, like, you know, folks just keeping safes of money and, you know, having to make drops at the bank every single day, these large cash drops, and certainly some security concerns there as well. So in terms of just the actual dollars that you're able to bank, how much do you think that'll limit the growth to come?
It sincerely hasn't at all. You know, the conference that I attended in Vegas, there was a massive expo. Like I couldn't even keep track of how many safe and vault companies were there. It's kind of just the reality of the situation. And I think, you know, heading into the election, I think there was some optimism that banking regulation would change under a Clinton administration. I think that level of optimism is totally off the table at this point. But, you know, this has been an industry that formalized, you know, close to 3 years ago. It's still growing in Colorado, despite it being one of the more mature markets. So people are figuring out a way to make it work. And there are smaller regional and local banks that are now banking the industry. You just have to pay a higher fee.
Right. So, you know, kind of stepping back and just taking a you know, a broad look at all of this, you know, if you kind of had to put your finger on it today and say, marijuana will or will not impact alcohol sales long term, in which direction would you lead? Some of your research, you know, seems to suggest that it has in some markets. As you mentioned, the data is imperfect. There's always, you know, a contradictory report that comes out that says, no, actually, it's not true. So long term, you know, how do you think all this is going to play out?
I think it will negatively impact alcohol consumption. Yeah.
All right. Well, that's a sobering thought. But that just leaves opportunity for folks here to figure it out, I guess.
That's exactly right. I mean, you know, there's just been so much research about, you know, this millennial consumer, right? And they are engaging with the alcohol categories as well as cannabis categories very, very differently, I think, than people would have anticipated. I thought there was a pretty telling piece of analysis from Heineken earlier this year that talked about the massive percentage of millennials that don't go out to get drunk. That was not my experience when I was in college. You know, they are really changing their behavior, and that's volume that is no longer an opportunity, right? Yeah. And they're much more health and wellness focused. And, you know, despite, you know, kind of the thought that, oh, if you know, ingest cannabis, then you're obviously going to get the munchies. Like, in fact, you know, there's 0 calories associated with cannabis. And I think, you know, this is a much more health and wellness oriented cohort, and you have to be mindful of that.
Well, we'll certainly see Netflix consumption grow, I think, as well. Vivien, thank you very much.
Thank you.
Cheers.